Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Wednesday, June 14th. Today we are going to take a look at Qualcomm. It is out of the information technology sector. This is a microchip company similar to like an Intel. Let's jump right in. If you want to know more about them, check them out, www.qualcomm.com. That is where I pull this information from. That's QUALCOMM.com. Inventing the tech the world loves, Qualcomm is enabling a world where everyone and everything can be intelligently connected. You interact with products and technologies made possible by Qualcomm every day, including 5G-enabled smartphones that double as pro-level cameras and gaming devices, smarter vehicles in cities, and the technology behind the smart connected factories that manufactured your latest purchase. Our powerful connectivity solutions keep you connected even in remote areas. Qualcomm 5G and AI innovations are the power behind the connected intelligent edge. You'll find our technologies behind and inside the innovations that deliver significant value across multiple industries and billions of people every day. So again, a chip manufacturer, they have their hands in connectivity for information technology, 5G, cell phones, your computers, smart cities, smart devices, that sort of thing. So you may be familiar with the company. Again, real similar to like an Intel. I think the one that's really probably outside of what Intel does is their AI, their hand in AI that I don't think that like an Intel would have. So that might be something to look at. I know a lot of companies are shifting that way, and it seems to be the new buzzword recently, but this one does have its hand in AI as well. So it would be an AI play as well as the microchip play there. Now, the reason we are taking a look at them, down 0.83%. Today, we are talking about Qualcomm Incorporated, ticker QCOM, out of the information technology sector. Closed out the day at $123.40. 52-week low as $101.47, as high as $156.66. They are kind of floating between that 52-week low and that 52-week high, though they really have run up in the last week. I was looking at this company last week in the 115, 116 range and was really hoping it would stay there. I really wanted to roll some of it. I've got an OHI, I think I may have mentioned it, the Omega Healthcare Investors covered call that expires this Friday in the money. So I'm going to end up with about $5,800 that I either need to roll back into OHI or find something to do with it. This is one of the companies I was looking at, but it, again, has really run up. I would like this company $116 or lower. But again, 123, it was in the 115s, 116s last week, which is when I started looking at it, but it really has run up the last week here. Average volume, 8 million. Today's was 7.2. You can see a bit of a sell-off here. It looks like they recovered at the end of the day. Market cap of 139.999 billion. A beta of 1.26. They are more volatile than the overall market. Price to earnings PE ratio is $13.40 per share. That means you would pay $13.40 for every dollar they earn. Earnings per share, very nice, $9.21 per share. Next earnings date is somewhere between July 25th and July 31st. So look for that coming up next month. Forward dividend is $3.20 paid out in the year. They are a quarterly payer. We'll see that payout per quarter here in a minute. Dividend yield 2.57. Nice dividend yield. Anything above 2% is really nice in my opinion. Ex-dividend date was May 31st, so it's going to pay out June 22nd. You would not be in line for the next dividend here. You would have to wait for the following if you were to buy them now. And a one-year target estimate for this one, at least according to Yahoo Finance, was $133.81. Now we're going to go over and look at dividend yield theory. You'd find that under statistics. What you do is you go down to dividend splits. If you were to go to Yahoo Finance, again, not affiliated, just one of the sites I like to look at, go to statistics. You go down to dividend splits. You'd look at their 5-year dividend average, 5-year average dividend yield, which is 2.64. You compare it to their current 2.57 or their forward, same number, 2.57, which is less than their 5-year average. So this speaks to some potential overvaluation. You want this current or forward dividend yield lower than their 5-year average, or I'm sorry, higher than their 5-year average, and then it would speak to some potential undervaluation. So currently being lower at 2.57, this one is a bit overpriced, at least according to dividend yield theory. Real close to fair value. Again, would love it back here, closer to this $101 per share where it was at. I think just as recently as 4 or 5 months ago. But again, it really has run up the last week. I know it was in the 116s last week, 115 even. Payout ratio is low at 31.98 here. Free cash flow is another one you want to get into. Go into financials. You'll find their balance sheet. You'll find their income statement. I like to look at their free cash flow because we want growing dividends over time. And the only way to get that is if you have growing cash flow over time. So 2019, 6.3 million. Drop from 2019 to 2020 down to 4.4 million. Big jump up from 2020 to 2021 to 8.6 million. Another drop down from 21 to 22 at 6.83. Looks like it's going to be another jump up back into the 8 millions here, at least where they're sitting at currently in 2023. So these type of companies are cyclical, right? Just like an Intel, just like that. But overall, from 2019 through 2022, and actually where they are currently, there is free cash flow growth. You want to see that. So that's what we like to see. They are repurchasing their own stock. That's nice to see as well. And again, Yahoo Finance has a target estimate of $133.81 to it. Speaks to some potential upside appreciation. And I'm highlighting that twice because the other source I usually go to, stockanalysis.com, does not have anyone that has taken a look at this. I am very surprised by this. First stock I've seen on their website that does not have any analysts take a look at this. So we will go with the Yahoo Finance estimate of $133 per share. Now, this gives a lot of the same information you would find under Yahoo Finance. You can go under financials, statistics, forecast, what we're looking at here. Unfortunately, it doesn't have one. And dividends we'll see on the next page. I like to look at return on equity and return on invested capital. You'll find that under statistics. And I like 10% or greater. Well, this is smashing what I usually look for. Return on equity, 58.10%, way above the 10% I like to see. Return on assets is even above the 10%, 21.7. And return on invested capital, I like 10% or better, and it's 32.50. So this company does a great job reinvesting the funds back into the business and getting a good return on them. That is very, very nice to see. That's what you want to see. Very high numbers here. Let's jump over the dividend. So again, payout ratio in the 30s, 34.33%. I think it was 33 in the other slide that we saw from Yahoo Finance. So very close numbers there. Dividend growth is 9.32. Very nice dividend growth here. And their payout per share is currently 80 cents. They just recently raised it up in May. So all the numbers on this one outside of dividend yield theory look pretty good. It's pretty close to fair value. It might be slightly overvalued in my opinion. Like I said, if you could watch this one and get it closer to that 52-week low, I like it under $116, and it's so close. It would have just been nice if that OHI covered call would have expired last Friday or the Friday before, but that's just the way things go. This one is on my watch list for anything under $116. That is where I'm at with this one. Really like the company, just not quite the valuation right now. This is my investment criteria. This is what I look for in a stock high level. Understand the business, growing free cash flow. These are all what we run through this the videos on, so you can kind of understand what I'm looking for and why I set the video up the way I do. Growing dividend payout ratio of 75% or less. We saw that one was in the 30s. Check valuation based on dividend yield theory. We do that in the very first slide. Buy below current cost basis or within 15% of 52-week low. That's why I have the $116 target on this one. That would put it within 15% of its 52-week low. ROIC or ROE, we saw that smoking numbers on this one, 50% for ROE and above 30 for the ROIC. So very nice there. And for financial companies, I look for a price to book of near or lower than 1. That is just for financial companies. You can use this metric for any of them, but that really applies to banks and that sort of company. And must meet 4 of the 7 or 5 of the 8 if it's a financial company to even want to entertain the idea of investing. Well, that is it. Let me know what you think of Qualcomm. Is it in your portfolio? Are there other stocks like it that you like better? You know, information technology sector, specifically out of the chip manufacturing sector, or AI. Again, like I said, they do have their hands in the AI, so it could be a sneaky AI play, possibly. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button and hit that notification bell. Join us on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, share stocks that we're avoiding or things that we've done wrong in the past, we can each learn from each other's mistakes, and so that we don't make those same mistakes. I do personally read and respond to the comments. I'm always interested to read your questions and or opinions or suggestions for future topics. If you have a stock like Qualcomm you'd like me to cover in a future stock pick of the day series, go ahead and drop that down below and I'll try to work it into the rotation. For those of you who have given me suggestions, they are on my list. I'm just working through some other companies that I had that I want to take care of first, and then I'll get to those. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.